Hello traders, you are welcome to my video on the FVG Positioning Average. Okay, so if you have been struggling with market timing and precision, then this indicator can help you identify fair value gaps and improve your trade execution. Okay, now fair value gaps play a crucial role in price action, and when you combine them with the FVG positioning average, you get a clearer view of market imbalances and potential trade setups. Okay, so if you are serious about refining your strategy, then this video is for you. But before we jump in, smash that like button, subscribe to the channel, and turn on notifications so you never miss another strategy breakdown. Okay, now let us just get into it. The FVG positioning average, this is an indicator, like you can see, I already added it to the chart, and it is designed to help traders analyze fair value gaps in a more structured way. Okay, remember that FVG stands for fair value gap. All right, so if you are not familiar with FVGs, this indicator represents or rather, let's talk about just a very brief the description of FVG. If you're not familiar with fair value gaps, they represent imbalances in the market, and they are usually created by aggressive buying or selling. So usually when there is an aggressive buying and you notice price surge in one direction, price surges in one direction, maybe you see an unusually large candle, there is a chance that there was an imbalance within that candle, right? So usually FVG occurs when there is large price movement with minimal resistance, leaving an imbalance between buyers and sellers. Then the FVG positioning average helps to track where price is in relation to these gaps. All right, where price is in relation to these gaps, giving traders insight into potential retracements or continuations. Okay, so it can be used across Forex, stocks, and crypto, making it a versatile tool for any trader. So now you will notice that there was a green shaded area. The indicator, highlights green shaded areas and red shaded areas. So now when you have a fair value gap in the bullish direction, you will notice this indicator paint a green, shaded area, showing that, there could be a chance of the liquidity getting filled, right? So you can see that we actually had a fair value gap around here. Remember I said when there is strong, an aggressive buying or an aggressive selling. So we can see that we had, an imbalance around here. You will notice that this particular candle, you can see the surge in bullish momentum, leaving a fair value gap around here, creating an imbalance, right? And guess what? Shortly afterward, that imbalance was filled because price had to come down to fill that imbalance. Now you will notice that this indicator painted this shaded area, showing that there was a possibility of price coming down, and if you want to trade in the direction of the trend, you can take advantage of that as a buying opportunity. All right, now let us look at an example for a sell. Okay, this is an example of a sell. All right, okay, this was kind of mixed. We can see red, we can see green. Please let us look for a better example. All right, ensure that you always get confirmation. Do not jump into trades. Okay, do not jump whenever you get a signal, even by this FVG positioning average. Okay, ensure that you get confirmation, candlestick confirmation. Okay, price action confirmation. You can also use other indicators to verify the signals given to you. All right, now we can see that we had an imbalance around here. You can see this particular candle. You can see here between here and here. All right, okay, this was a very small, there was a very small imbalance here. It wasn't that much, and eventually price didn't eventually fill that up. Okay, and that's even a sign that no indicator is perfect. Okay, I was just checking this right now, and I saw that this particular candle Yeah, although there was a small imbalance, you can see there was just a small imbalance here, and price didn't eventually fill that up. The price actually came up, yes, fine, it came up, but it didn't fill the imbalance completely. Okay, now I just want to look for another example. All right. um okay, okay. Now, this in this scenario we can see that, okay, we had a series of bearish candle, and the indicator gave us a sell signal based on this shaded area. Remember that whenever you have a red shaded area, it's a sell signal. Okay, let us keep the intricacies aside. Let's keep the details of the FVG aside first. Whenever you have the red shaded area, is a sell signal. Whenever you have the green shaded area, it's a buy signal. All right. So even if you do not fully understand FVG, whenever you get the green shaded area, just know that you have a buy signal. There is bullish momentum. But the only thing is, try to get confirmations first, okay, before jumping into the trade. So here we had a sell signal, and after this initial move, yes, after this initial move, we can see that there was actually notable retracement, okay, all the way up to this point. So this was a good place to enter a sell. So if you had considered entering a sell around here, probably stop loss could be just above the previous swing high. Then your take profits can be at the nearest support zone. All right, and in that case, you can see we're going to be having a risk to reward ratio of about 1 to 2.7 approximately. Yeah, so that's a good one. Okay, but ensure that you always get confirmations. Okay, that is a very important emphasis. Get confirmations first before hopping on the trade. All right. So when looking at, or rather when using the FVG positioning average indicator, just pay attention to price reaction around those FVG zones that are identified by the indicator. All right, and then you can use this indicator as a confluence indicator, to get additional confirmation to price structure, to market structure. All right, combine this indicator with trend lines. Always use trend lines, okay, please, so that you will know when a break of structure has happened. For example, now this sell signal that this indicator gave us, because I can see that a bullish structure has been broken thanks to this trend line. You can see that this trend line showed that a bullish structure has been broken. There was a break of structure. Then this FVG positioning average gave us a sell signal. That was a confirmation. So when you use trend lines, use your horizontal support and resistance levels, and perhaps if you are comfortable with it, you can add a couple of other indicators to the chart, depending on if you are the indicator friendly type. Okay, just for the purpose of confluence, all right, for the purpose of additional confirmation. But if you prefer to stick with price action, that's absolutely fine. Okay, because some traders don't like having a lot of indicators on their chart, and I understand that completely. You don't necessarily need to have multiple indicators on your chart. You can just decide to use one indicator and combine it with market structure, combine it with price action and all of that. So if you are using trend lines, just watch out for break of structure. When you have a break of structure and then you notice a sell signal appearing just after that, there is a chance that that move could be valid, and you can see that that's exactly what happened here. Okay, all right. Now, there you have it. Okay, this indicator is quite an effective one, and you can use it to spot market imbalances and improve your trade execution. Whether you are a day trader or swing trader, understanding how price reacts to FVGs can give you an edge in the market. So if you found this video helpful, hit that like button, subscribe to the channel, and turn on notifications so you never miss another trading strategy breakdown. Drop a comment below if you've used the FVG positioning average before, or if you have any questions. Thank you for watching, and I'll see you in the next one. Happy trading.